I would, while I'm sharing my topics, you all can pause me if you have any question. I think it'd be good. I think what I would like today will be more interactive so that we all can learn together, and where I can address your concern, you can always uh, pause me and ask question. Thank you.
Yeah, just a bit of a housekeeping. If you have questions, our team is online, available to assist. At the same time, we will note the questions and then the speaker will answer at the end of the session as well. And then if you wish to have our speakers presentation, PowerPoint or what, you can give us your email on the group chat or in the, and then we will follow up with you after the talk as well. Yeah, so I will leave you all to our speaker for the day.
Thank you, Gina. So Gina, I'm going to share my screen now. So good evening to everyone again. Thanks for spending your Thursday evening with me. So I hope today, after the whole seminar, after the whole talk, you all will bring back something. So at least be aware of some of the tax issues that you're facing either as a personal individual or business. So just a little bit about what we do. I'm going to do a bit of sharing. But before that, just a little bit of disclaimer. Can I get your agreement that what I'm going to share today represents my view and my interpretations of the tax rules and regulations in Singapore? And these are based on specific examples and assumptions. Please consult your tax agent or advisor for specific situations and transactions concerning your personal company's tax matter. Okay. So can I get everyone to agree before I move on to my presentation? Okay. All right. So this is what I'm going to go through today, just a little bit about Finova. And then after that, I'm going to jump into the topic for today, my tax obligations. And after that, I'll take up some questions if you have any. Like what Gina say, if you have any question, you can always type into the chat box or ask some of the panelists. Okay. So just a bit of introduction of Finova. Finova has been around since 2008, and we are actually a professional services firm. So we provide, we basically service our valued clients and associates. And one of our goal is to actually educate our clients on the ever-evolving challenges that they face in their business. And where we can, we provide solutions. And here, we are committed to be your tax advisor, your trusted advisor. We want to be insightful to our clients. We want to understand our clients' business, and we want to help them along the way. These are services that we provide. We have corporate secretarial services, accounting services, tax services, business advisory, and others. So after the whole session, if you have any needs or services from all these, you can always approach me. Thank you. Okay, so what is my tax obligations? So what I'm going to share today is basically from a part of it is from personal tax obligation, and the big part of it will be on business or company's tax obligation. Yeah. Before that, Gina did mention that our tax filing for individuals is going to the deadline is coming pretty soon. If you file on paper is on the 15th of April, but most of us will be online, which is 18th of April. Still not too late, you know. If you don't know what to do, you can always approach your accountant or tax advisor. So what are the type of business vehicles that we commonly see in Singapore? You have heard company. Company can be public or private limited. a limited liability company, which is most commonly used by a lot of lawyers or professional firm, or sometimes non-profit organization called LLC. And you have heard about partnership. Some of you are already doing business using some of these vehicles, and sole proprietorship, and of course, limited liability partnership, or what we call LLP. So the tax implications or the tax obligations for each of these entities are different. Yeah, you may or may not know. So I'm going to take you through some of these questions today, and I hope after this session you will also understand what are the things that you need to file and when you need to file. Okay, let's test some of your knowledge today. Okay, as a business owner or individuals. I'm going to go through a quiz. So this is going to be applicable to everyone. So as much as you can, you try to answer some of these questions. Just attempt. There's no. I'm not going to rate you, or it's not. I'm not going to give you points or what. You're not going to win anything. But just to test your knowledge about taxes in Singapore, okay, or compliance in Singapore. So what does all these dates means to you in the context of compliance? Let's go through this one by one, and we can learn together. So 1st of March, what does it represent? Okay, so it represents the submission of auto inclusion scheme, and who is this applicable to? And this is actually applicable to all employers. Yeah. Number 2, 3 months after financial year end. What does this mean? It represents the submission of estimated chargeable income for companies. And 31st of March just passed a few days ago. So those whose financial year end was 31st of December 2020 last year, they should have filed their ECI unless they're exempted. These are for companies. 15 and 18 of April. I'm sure all of you will know this is basically submission of your individual tax return. And 6 months after financial year end, what is this? This is holding of your annual general meeting for companies. And 7 months after the financial year end, filing of annual return, also for company. Some of you get confused, when your corporate secretary or your accountant tells you about AGM, and you think the 2 dates are the same, 6 months and 7 months. But actually, there are 2 different dates. First, you must hold your AGM before you can file your annual return. Okay, and 30th of November. So what is this date? It's a submission of your tax return, either Form C or Form CS for company. Okay. Question number 2. So I own a car and uses it for business purposes. I highlighted there business purposes. Every month I will claim the expenses incurred for petrol, parking charges, and maintenance through my company. As these expenses are incurred for business purposes, therefore I can claim tax deduction. How many of you say it's false? Yeah. So the answer is false. Even though these expenses are for business purposes, but they are specifically for private car, and they are not allowed for tax deduction. Why? You may ask a lot of question about this, and I've been approached by many business owners. Some of my clients ask, how come I cannot? So this is basically specifically stated in Section 15K of the Income Tax Act, and it says specifically say that expenses that you incur for passenger vehicles is not tax deductible. Yeah. So some of my clients ask, so what do I do? I need to take transport to meet my clients, to do my business. So what do? I said, take taxi lah, or take bus or MRT. Best if you want to own a vehicle, buy a commercial vehicle, lorry. Okay, question number 3. So the followings are the returns that I need to file with IRAS. So what are the returns? So some of you may know this, some of you are still not familiar. So Form B1 is applicable to individuals. Form P is for partnership. Form CS or Form C are tax returns for companies. And what is Form 5 and Form 7? These are GST return, GST return for companies who are registered. with are GST registered, and Form 7 is basically for correcting of errors of past GST return. So question number 4, I am self-employed. I'm a property agent, insurance agent. I'm a tuition teacher. I do ad hoc training. I am required to prepare the following for submission to IRAS. What do you think? Is it a 2-line statement or 4-line statement? Some of you may be surprised. Oh, what is this all about? You know, I've never heard of this. Yeah. So 2-line statement are for those who earns a revenue of 100K and below. You can file a 2-line statement. Basically, in your tax return, you have to file a 2-line statement where you mention about your total revenue and adjusted profit or loss. 4-line statements are for those self-employed who earns more than 100,000. So you need to know how much is your revenue. You need to know how much your gross profit. You need to know how much your allowable business expenses. And you also need to know adjusted profit or loss. So what does this mean? This means these are both applicable to business owners. Yeah. Sometimes you have to file your 2-line statement. Sometimes you have to file your 4-line statement. So that means for you to keep track of this, you must also have a systematic way of recording your revenue, your costs, and your expenses for you to arrive at your profit or loss, right? So a lot of people that I met in my line of business, a lot of them, they don't prepare this. At the end of the, before 15th of April, all of them scramble, you know, trying to gather all the receipts and you know, invoices to try to come up with some numbers to file to taxes, to IRAS. But some of them really get into trouble because what they file at the end of the day, because they don't keep record, they get into trouble because IRAS do review every now and then of your tax record. Okay. So question number 5, I own a company. I am the sole director and shareholder. A company that has ceased business operations in 2019. There was no revenue generated in 2020. And for me, I think I don't have to file tax return for 2020. Do you agree or not? So true or false? Okay. So the answer can be both. It can be true if you have applied for a waiver to file tax return. So that means, you know, in 2019, you have ceased business, you apply to IRAS a waiver to file your tax return, and IRAS will send you a letter, a reply to say that, okay, you have been given a waiver, so you don't have to file your tax return. False is if you have not applied for the waiver. So don't stop filing your tax return just because you don't have revenue. Okay. So some of you may have been in this situation. You have forgotten to file, or you take it that you don't have to file. Don't be surprised if you receive a letter from IRAS asking you to file your tax return. Okay. So number 6, how much do you know about taxable income and non-taxable income? I think this is something that a lot of you wants to know and have question. So let's go through one by one. So question number 1. So you receive $1,000 as gift from your family member. Is this taxable? What do you think? Yes, no, or don't know? So the answer is no. So you don't have to declare in your personal tax, you know, in your personal income, the $1,000. Number 2, your employer gave you $250 ang pao for Chinese New Year or Hari Raya. So is this taxable? The answer may surprise you. It is taxable. Yeah. So just take note that if you receive ang pao from your employer of $250, you have to file this as your personal income in your personal tax. Yeah. But if it's below $200, you don't have to file. So tell your employer to give you ang pao less than $200. Number 3, you won $5,000 from your 4D bet over the weekend. So should you file this as your income? The answer is no. Betting income or gambling income are basically exempted from tax, so it's not taxable. Number 4, you receive $500 interest income from your Singapore savings account at the end of 2020. So is this taxable? Wow, I think if you receive $500 of interest income, I think your deposit must be quite a lot of money. Yeah. So bear in mind, if you receive such interest income, it is not taxable because in Singapore, interest income from the local banks, it is basically tax exempt. And question number 5, you collected monthly rental income from your rental of your apartment in Singapore. Is this taxable? Yes, it is taxable. Okay. So are you good so far? So only up to question number 5. So I have a few more questions. So number 6, you receive rental income from your overseas property. I think some of you has been is here to also find out about overseas investment, buying a property overseas. So what if you receive rental income from your overseas property as an individual investor? Is this taxable in Singapore? The answer is no. Okay. Number 7, you bought and sold shares and made some gains in 2020. I mean, a lot of us are into stock market investment now. It's pretty volatile. Some of you invest in Singapore, some of you invest in US. So you bought shares using your own pocket money, using your own savings and reserve. So is this taxable? The answer is no. Okay. Number 8, your partnership or LP business in Singapore receive income from overseas. Is this taxable? The answer is yes, it is taxable. Okay. So later on, I will explain to you why number 8 is taxable. And number 9, you made withdrawals from your supplementary retirement scheme, or what we call SRS. So is this taxable? The answer is yes. Some of you question because your tax advisor or accountant tells you, hey, for you to reduce tax, you can put some money into SRS, you get a certain tax deduction. The answer, yes, that's correct. You can get a tax deduction, but the day when you make the withdrawals, you basically have to pay back tax. Okay, so basically it's a deferment of your income tax. Now you reduce it because you put in some money in SRS. Many years later, when you withdraw it, you basically withdraw. And that time when you withdraw, let's say you're retired at 65 and you start to withdraw your SRS. At that time, your only income is only the SRS. So your tax will be much reduced compared to today. For example, if your income is such a big amount, and then you put in SRS to reduce the tax. Yeah. So it still makes sense for you to put in money to SRS to reduce your taxes. Okay. So I hope you have learned something from some of these questions that we have gone through along the way, or if you have any question, you can always ask. So I'll pass this time to Gina for a short break.
Thank you. Okay, we will have a very little, less than 2 minutes break for introducing our Cambodia investment, because we are sponsored by this, and then to give this free webinars and then education sessions. And then on the coming weeks also, we will be having every Thursday talks about related to our business and then our corporate society and all these things. So let's just share the video clips right now. Yeah.
in the 1st century AD. The Bonam dynasty established one united kingdom, and the history of Cambodia started. In the 9th century AD, the Angkor dynasty flourished and fostered the prosperity and national strength of Cambodia. The ancient country, boasting 2,000 years of history and civilization, which is long-lasting. Today, standing at a new historical starting point, Cambodia is regaining its resplendence. Cambodia stands out as a hub of international strategies, with the Belt and Road Initiative is leveraging the potentials of incoming investment. The Trans-Asian Railway is the new trunk line for future development, with integration of ASEAN countries is to be a new summit of economic growth. Cambodia, known as the new economic tiger of Asia, is in the golden period of rapid development. It has reported an annual GDP growth of 7% for 9 consecutive years, ranking top 1 in Southeast Asia. Its splendid culture and enchanting history attract 4 million tourists from the world every year. Phnom Penh, the capital city, as a national center of economy, politics, and culture, holds more than 60% of Cambodia's economic resources. As a result, the real estate price of Phnom Penh is growing at a steady annual rate of 10 to 15%. Global investors are allured here, bridging the global economies. The fortune promised by Cambodia is self-evident.
Okay, thank you so much for everyone's patience. I will pass the mic back to Mr. Tan because we still have a lot to share about the text. Mr. Tan. Yeah, Mr. Tan, are you ready? I think, Mr. Tan, you have to unmute. Mr. Tan, maybe you have to unmute it. Okay, sorry. I think there are some technical problem. Mr. Tan is logging in again. I think the presentation stands still. So he's coming in a very short while. So in the meanwhile, I will just like to tell that, Mr. Tan will be in our office at this center point 0-04 JUSCO office, and then he'll be available.
Hello,
from
sorry,
yeah.
got some technical error.
Yes.
I got
sure.
hang for a while. So during the break, one of the participants basically asked if I receive AMPA of $200, is it taxable? So the answer is yes, it is taxable. So anything below $200, then it will not be brought to tax. So I hope it
Okay,
answer your
so I
question.
will tell my boss $199.
I'm going to continue on with the next item. So I'll go through some of the general rule on income. So the general rule in Singapore is all income earned or derived from Singapore is chargeable to income tax. Okay, so you earn anything in Singapore, you'll be chargeable to income tax, except for those items that are excluded. Okay, so generally overseas income received in Singapore on or after 1st of January 2004 is not taxable except in some circumstances. Okay, so these are the circumstances of overseas income that is taxable in Singapore. It is received through partnerships in Singapore. In the earlier question, we went through some of the question. So if I receive income from my partnership, through my partnership, so is it taxable? So in this case, yes, it is taxable in Singapore. And number two, your overseas employment is incidental to your Singapore employment. So if you are in Singapore, if you are employed through a company in Singapore, for example, and you are posted overseas for, let's say, 1 month, and while you are overseas, you basically earn income. So those income are actually taxable in Singapore. Okay. So question number three, you are employed overseas on behalf of the Singapore government. Let's say you work in an embassy in let's say in Malaysia. You're working there, and in fact you're working for the Singapore government. So in this case specifically, your income is taxable in Singapore. So you're not your income will not be brought to tax in Malaysia, but you brought to tax in Singapore. And number three, you have trade or business in Singapore, and your overseas income is incidental to your trade in Singapore. So while you're carrying your business in Singapore, and then because of that, you generated some income overseas, then those income will be brought to tax in Singapore. So what are some of the examples? Let's say you have a partnership business in Singapore. So some of your let's say as a partnership in Singapore, you earn services income. Let's say in Indonesia, you go there for 1 week, perform some business there, and then because of that, your clients pay you some income. So that income it is actually brought to tax in Singapore. It's supposed to be brought to tax in Singapore. Okay. So next, general income for company. So income accrued in or derived from Singapore, as well as income received from outside Singapore, is taxable. This is from the perspective of a company. Okay. So what does this mean? Accrued in or derived from? Okay. So it says income received. Okay. So basically, for some of you, you have a company in Singapore, and so the income source in Singapore or accrued in Singapore is basically based on all your activities or operations in Singapore. If you sign contract with a customer in Singapore, or your overseas clients come to Singapore and they sign contract with you, those income are deemed to be accrued in or derived from a Singapore source, the Singapore company, basically. So your source of income is actually from a Singapore company. So what about foreign source income? Some of you may heard this term, foreign source income. Like I mentioned an example earlier on business in Indonesia, for example. So the concept is your income received from outside of Singapore, which is your foreign source income, is taxable in Singapore. When is it taxable? It is taxable in Singapore when it is remitted. It is considered to be received in Singapore when it's remitted or transmitted or brought into Singapore. Okay, you earn there, and then the money the client pay you, and then you receive it in Singapore. Those are brought to tax in Singapore. Or if you don't have, if you don't bring back those money from outside of Singapore, and let's say you have a bank account in Indonesia, but you use those money to settle some trade debt, or some debt for your business.
Hi, sorry, I think Mr. Tan is out again. Please wait a minute. I think he should be coming in back again. So like I mentioned before, on Sunday between 2 p.m. to 6 p.m., Mr. Tan will be at our office at Center Point 04-04 for all your questions and answers, and you can discuss in depth with him also, mainly on your company taxations issues or personal tax or any issues that you would like him to answer. He'll be available to meet up, and then we will have some coffee and some snack sessions down here. So we will be also putting in our chat the full address later after the Q&A. So let's wait for Mr. Tan to come back for a while. Yeah, you're back on.
I'm so sorry, guys, the technical issue. Okay, so coming back to when income is taxable for overseas or foreign source income. So I'll go through the blue points again. So income received from outside of Singapore is considered to receive in Singapore when it is remitted or transmitted or brought into Singapore. I mentioned earlier, if you have bank accounts in Indonesia for business that you carried out in Indonesia, and then you remit the money back to your Singapore bank accounts, those income will be brought to tax in Singapore. Or number two, if you use the money that you earn outside of Singapore in respect of to settle some debts that is related to your trade or your business, then those settlement of debt will be considered as remittance, and therefore it will be brought to tax in Singapore. Number three, used to purchase any movable property. Let's say you buy equipment or raw materials and you brought into Singapore. So those will be also considered as remittance, and therefore it will be brought to tax. So some of you question, so what is this foreign source income? So how do I keep track when should I bring it to tax? When should I not bring it to tax? So my advice is speak to your accountant, because there are specific ways for us to assess on how those are considered to be remitted in Singapore. For money that you transfer is very straightforward, but for settlement of debt or buying a property, these are very difficult to assess, and I suggest that you speak to your accountant. Okay. Okay, let's look at the next item. So general rule on income, I've gone through this, and what are the sources of income? So as an employee, so you look at the employment, these are the things that you know: salary, gains from your exercise of stock option, income received from overseas, your pension or retrenchment or retirement benefits. So looking at the gains from exercise of stock option, some of you works in big MNC and you are given stock options to buy the shares of the company at a reduced price. So bear in mind the gains that you earn from those stock options are supposed to be brought to tax. Yeah. Number two, trade, business, profession, or vocation. So income as a self-employed or sole proprietor, whether you are commission agents, freelancers, or taxi drivers or hawkers, you'll be brought to tax. Okay, these are some sources of income. The income received through partnership, income received in the form of virtual currencies. Some of you get paid by way of Bitcoins or some other virtual currencies. Take note, those are type of income as well. Okay. So for those who are into property or investments, you receive dividends, you receive gains from the sale of property, shares, and financial instruments. You also receive interest and rent from your property. So dividends that you receive from your stocks investment of Singapore listed companies, are those to be brought to tax? Yeah, dividends in Singapore is basically tax exempt. So basically you don't have to declare in your personal tax at all. Okay. What about company? Company who receive dividends from their investments, are those to be brought to tax as well? So again, dividends from a Singapore company will be tax exempt, but dividends from, let's say, for a company who invests in another company which is overseas and you receive dividends from those dividends, are those to be brought to tax or not? Okay, so there are specific exemptions for dividends that you receive from different countries, and this again, there are certain conditions that you have to meet before those income are exempted in Singapore. And other sources of income are things like annuity, charge, or estate. You receive some money from estate, of your family's estate, or you receive royalty, or what about winnings from Toto or 4D? So these are type of income, but whether or not those are taxable, I mean, I mentioned earlier, gambling income are not taxable, yeah, and withdrawal from SRS. Okay. So I've come to the end of my presentation. Maybe I'll take some question before I go into the expenses side.
Yeah.
Are there any specific question with regards to income?
Yes, Mr. Tan, there is one question being, sent to us prior to your speech for your webinar today. There were some questions. Normally sent is that personally, I invest in shares, equities in US stock market. Would it be taxed on the profit I make? So this question was sent to us. How can you answer for the participant?
Yeah. So the question is, if you invest in shares in the US stock market and you make some gains. So personally, if you invest in those stock market and you make gains, those are not taxable in Singapore. So what I'm sharing is, if you invest as an individual, but if let's say you invest as a company, let's say you own a company and the company uses its own fund to invest in stock market in the US and make some money. So those could be subject to tax, okay, depending. Yeah. So we have this, generally a lot of people understand that there's no capital gain tax in Singapore. So what does capital gain tax and what is other than capital gain tax? Yeah, so there's a few conditions that you have to meet before it is classified as capital gain or revenue in nature. So typically, if it's revenue in nature, you'll be brought to tax. So if you invest as a personal in stock market, it will not be brought to tax. Yeah.
Thank you, Mr. Tan. Okay, now because we are promoting investments in overseas, we always have these questions coming up to us, If I sell my overseas property and then make gains, would I be taxed in Singapore? So this is a very common question we are facing right now. So maybe if you can give us a good answer.
If you invest as an individual, let's say your own money in overseas property, those will be not brought to tax. But again, I mentioned about whether you invest as a company or as an individual. So if you invest through a company, using a company to invest a property in let's say in Cambodia, you mentioned about Cambodia investment.
Yeah.
So are those gain taxable? The answer is yes, it is taxable.
Oh, okay. As a company, it's taxable, and around how, as a normal company tax.
Yeah, but I also mentioned about foreign source income. Yeah. So in this case, your investment in, let's say in Cambodia, so are those considered foreign source income or Singapore source income? So that's the question that we have to, the hurdle that you first have to pass.
Oh.
So if let's say it is a foreign source income, it will only be brought to tax when those income are remitted back to Singapore. Yeah, when the money come back to Singapore.
Okay, so if they have used the profit to reinvest in other properties, doesn't add.
Yeah.
Okay.
So invest in other properties is fine as long as it is immovable properties. So if it's movable properties like car, for example, then it will be brought to tax in Singapore. Yeah, because those are considered as deemed remittance.
Great. So maybe before we have more questions, would you like to share the rest of the things? Or
Yeah.
Yeah.
So there's just a few more slides for me to go through. So we have gone through the income side. Now is for us to understand the general rule of deductibility of expenses. So some of the question in the quiz I did go through on expenses. So you may want to know what type of expenses are deductible for your business or individual or self-employed. Yeah. So the general rule is this: business expenses are the costs that you have incurred in the course of running your business. Only allowable business expenses may be deducted against your income to reduce the amount of tax payable. Okay, so generally, deductible business expenses are those wholly and exclusively incurred in the production of income. So while you are trying to generate revenue, you incur those expenses. So those are tax deductible. But then again, you ask me, what about private vehicle? Because you mentioned it's wholly and exclusively for the production of income. I use my car to meet client, Yeah, those are specifically stated in the Income Tax Act that those are not allowed. Yeah. So the law say cannot means cannot. Don't anyhow claim. Yeah. Okay. So for expenses to be tax deductible, they must satisfy all these conditions. They are solely incurred in the production of income. Okay. They are expenses that are not contingent liabilities. So these expenses cannot be a provision in your accounts. Sometimes business owners, they provide a certain amount of expenses in their books. For them, it's like, just in case I incur this because my client, let's say for like warranty expenses, right? So some of you are in the business of construction, for example, you put in a provision for warranty costs. So are those tax deductible? So here, it will not meet this criteria of, because those are contingent. Only if something happened, then you have to incur those expenses. So those type of expenses are not tax deductible. Okay. So expenses are revenue and not capital in nature. So what are expenses which are capital in nature? Like buying computers, for example, or buying computers of certain amount and above. Or you buy an equipment, let's say an equipment, $5,000 equipment. So those are capital expenditure. Yeah. Okay. There are also expenses which is specifically excluded from deductibility of expenses. There are also expenses that that has limit on how much you can claim as deductible expenses for tax purposes. So these are pretty technical, and there are certain ways for you to calculate. For example, medical expenses for your employees. So your staff went for MC, claim medical expenses from the company. Yeah. So there's a certain amount that is only allowed for medical expenses. So ask your tax agent how to calculate. Yeah, even though these are specifically for your business, but clearly stated in the Income Tax Act that you cannot claim all. Okay. And these are expenses that are not prohibited from deduction under the Income Tax Act. So there are certain expenses which are totally prohibited. For example, penalty. You incur penalty in your business because you didn't file your taxes, you didn't file your annual return, or you incur penalty because for example, in your construction business, for example, there are certain period that you have to complete your construction, but because you didn't meet those, you didn't finish your construction in time, then you are penalized. Typically, those expenses are not tax deductible. Okay. So I've ended my presentation. So I open this time to maybe question from the floor.
Thank you, Mr. Tan. Any questions more from the Audience, maybe they can type it in, or if they are really shy, please come down on Sunday to meet Mr. Tan. So yeah, okay, I got one common questions, which
Yeah.
I think including me may have in one or the other years have done this. If I forget to report one of my income tax, let's say for financial year of 2019, what should I do? Should I panic and then run to IRAS now or what?
Okay, these are pretty common. In fact, we met some clients who has gone through the same thing. So they, unfortunately, IRAS picked them up and reviewed their report. I reviewed their taxes and realized that they forgot to incur, or they forgot to report some income. So what do you do, right? So before IRAS come to you, what do you do if you realize that you actually forgot to declare? As an individual, if you go to your personal tax form, when you file your taxes, there's one line item which mentioned an item of income that you forgot to report last year. So you can actually report it in the coming tax filing. So you can
Okay.
actually include that. But let's say 2 years ago you forgot and the amount is huge, then what do you do? So there's this thing that we call a voluntary disclosure program for taxpayers. So where IRAS, if you go on this basis, you voluntarily declare. If you don't know how to voluntarily declare, don't know what to do, don't know where to file, you can ask your tax agent or accountant. So typically what we can do is write to IRAS, tell them that, hey, in 2019, I've earned this income, but I actually forgotten to reply. I've forgotten to declare. So now I want to declare. So most of the time, if you go on that basis, there will not be penalty. But having said that, IRAS will always ask you why. I mean, the reason why you didn't declare. If you voluntarily give them information, be nice. I think as you report those income, just tell them the reason why, and they will only ask you to pay the taxes that you underpay lah. Yeah. But if let's say it's 5 years ago, then you forgot, and then every year you forget something, you may have to pay some fines lah. Yeah. Okay. If you don't know what to do, come on Sunday, go through with me. I'll be able to give you some advice lah.
Yes,
Yeah.
definitely please do come, because I'm sure from now to Sunday we have some questions come building up also. At the same time, I got one more last questions, is that regarding the expenses that you were just now sharing. So I got to understand that if there's a overseas expenses from brands or marketing for a corporate, could it be double tax deducted in Singapore?
Yeah. There are some specific expenses, especially for companies in Singapore who venture overseas for business. Those expenses, let's say you have an exhibition, you participate in an exhibition in, let's say, Shanghai. So some of those expenses you get double tax deduction. So let's say you incur $1,000. So in Singapore, you can claim $2,000 as deduction.
Oh,
Yeah.
that's wonderful for investors in overseas, going in venture overseas.
Yeah, definitely.
So I'm sure we will have a lot more questions for you, Mr. Tan.
Yeah.
Really appreciate your time. And then let's see if we have more questions. If not, then we could end these sessions. But we really truly look forward to having you here in our office on coming Sunday. And then I'm sure some more of our SME clients and then enterprise company clients will be also here to ask questions like even today. What you have shared is, I'm sure, at least minimum 20 to 30% of what you have shared is something that is either we have forgotten or we have just learned from you. So I think it was very much useful session. Thank you so much. And yeah, if yeah, so yeah, maybe with this we can close this session.
Thank you.
Yeah, and then you can still write down if you want to have the PowerPoint or sharing or anything, or you can contact us at any time. And then our just office address is in the chat box right now. Maybe if you can open the chat box and then take a snap of the thing, or those who has invited you, we will be also following up with the SMS and the emails also to share the office locations and the timings also. So with that note, thank you so much, Mr. Tan,
Thank
for
you.
your time, and then we truly look forward to having you here on Sunday.
Thank you. I'll see you all. You can contact
you.
me through my address and email
Yeah.
on the screen. Thank you very much, everyone.
Okay.
Hey, Bintang. Thanks for support. Hey, just a quick one.